All right, good morning. It is Monday, August the 5th, 2024. We hope everyone had a nice weekend. First off, I just wanted to thank many of you who gave some really kind feedback from my daughter Keegan in last week's video. I shared some of those notes with her. Just made her feel very, very special. So I thank you for that. I must say, for as many compliments as my daughter received in last week's video, I think I had a similar amount of feedback from those of you saying I need a haircut. Okay, so I'm not in disagreement. It's getting a little long here, particularly in the summer months here in Charleston. But actually, the wonderful woman who cuts my hair has actually been out of town for a bit, so I do have a haircut scheduled, not this week but next, so that will be addressed. But just a couple other quick housekeeping items. Certainly those of you that are local are probably aware there is a tropical storm kind of heading up our way, and I mean I read it might be 20 to 30 inches of rain in just like a 48-hour period, which Charleston doesn't do a great job with flooding, so just making note of that because we'll see the way it plays out. But there's a decent chance our team could be working from home at some point this week. So just a heads up there. The next note here I have is late last week we emailed out fall review invites. Okay, so we have the little scheduling link that you click. Okay, so if you meet with our team, for our semi-annual reviews, and you didn't see the link, good chance it's either in your spam folder or just reach out to us if you don't see it again. We can send it again, I should say. So just let us know if you don't see that scheduling link, and we will get that sent out to you. I will just mention, it really, really helps our team a lot the earlier you can just schedule your review, right? So even if you don't plan to meet until late September, if you could just get on the schedule, for that time, it really helps us prepare. We want to have everything ready to go ahead of time. Also, when you schedule, really helps us if there's something you want to add to the agenda. So, as always, we come with a big list of things we want to discuss from our standpoint. But if there's something you want to add, please let us know. We like to be really, really prepared for the reviews. So let us know on that. Really interesting week in markets last week. So so if it kind of started Wednesday. So you had the Fed meeting, and no surprise there. The Fed did not cut rates, but their language was very kind of friendly, very accommodative, okay? And it almost makes me wonder if they knew what was about to be released in the next couple of days, right? So between the initial jobless claims, which was a little bit higher, right? So people filing for initial jobless claims on Thursday, and then Friday, the July employment report was quite underwhelming, okay? Disappointing would be a better word. 114,000 new jobs added. The unemployment rate ticked up to 4.3, okay, which came as a surprise. All right, so with that new piece of information coming into the market, what that tells the market is, there's an increased probability that the economic slowdown we've been talking about for a while, could be approaching, right? So on that, you have interest rates fall. So remember, when interest rates fall, bonds move in the opposite direction, right? That's an inverse relationship. Okay, so bonds have just a wonderful week last week. Okay, and it's probably not the headlines you're seeing last week or this morning, right? People like to focus on the more attention-grabbing headlines, right? But bonds had a wonderful week last week. If you look out on the long end of the curve, a ticker like TLT, 20-plus year U.S. Treasury, 20-plus U.S. Treasuries, up over 5% last week. something like BAB, so that's the Invesco taxable municipal ETF, that's up well over 3%. And then even like a core bond holding, so like Vanguard's BND, up well over 2% last week. And it looks like a lot of that's going to follow through again into this week, just given some of the economic uncertainty, right? Because you see, last week U.S. equities down a couple percent, tech heavy like a NASDAQ was down over 4%. And so some pockets of tech, it looks like even pre-market this morning are going to be nearing bear market territory. Okay, down 17 to 20%. Some pockets of tech, and so again, I think the main point I was hoping to make this morning was just it would be really easy, and I see a lot of investors do it, and not our clients, but it would be really easy to fall in the recency bias trap. And just you're taking a look at the markets over the last 2 to 3 years and be like, bonds haven't done all that well. Technology's done really well, and it's easy. It's really easy to get in that trap where you might lose a little diversification. You might get a little bit more concentrated in your bets, which can be quite damaging, right? And so, here at our office, that's why we're big believers in data-driven process management, asset allocation, because inevitably, there's going to be slowdowns, and particularly for retirees, we talk about it a lot, but kind of that war chest of cash and bonds can really act as a nice counterweight to a portfolio, right? Portfolios last week, I mean, if you're in a decent, balanced strategy, you did just fine last week. So be really interesting, looking at the futures this morning. Definitely some follow through. Looks like a lot of tech is going to continue to be sold. Again, you see rates down even further. This is the steepest yield curve we've had in a while, which long term, that's actually a very encouraging sign. But like the 2s and 10s, which have been inverted for a long time, are now flat as of this morning. On my screen right now, they're both about 3.7 on the 2s and 10s. And even like the 2 to 30 year maturity, big upward sloping now, right? So it's like a 30 basis point difference where that curve was inverted for a long time as well. So for nerds like us at the office here, this is interesting, fun, but we're really excited to see everyone this fall. So questions, comments, concerns, please don't hesitate to reach out to our team, and we'll talk to you soon. Thanks.